Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Wednesday, February 25th, 2009. Well, as we get into today's action, guys, I really want to focus in on what the market's doing. We saw an ugly sell-off to start the day, a beautiful rebound, almost recapturing the majority of the losses, then a second sell-off, which almost took us to a double bottom level, and there's a key trend line playing out here I want to draw in on the charts to start out. But right away, just talking about it, the S&P down about 15, Dow down 135, and the NASDAQ trading lower by, about 25 or so, 25, 30 points here on the day. Couple things to go over, first of all, folks. First of all, we're seeing a mixture bag on the commodity side. Oil, a great move up today. Fantastic move up in oil. Oil approaching $42+ a barrel per oil. In fact, it's even getting close to $42.50 to $43 here, as it's up well over $2 on the day. Gold is slightly lower. Again, that can be looked at in a couple fashions. The U.S. dollar is actually a little stronger on today, and that can be helping as well push gold down, while oil has just been so killed lately, literally so oversold, that it is bouncing about a little bit today, it seems. Now, you're looking at yesterday and today, and this is a little bit of going back the day before yesterday, or Monday. Now, what you can see here is you have a bunch of trend lines, and I want to just start going into them. Then we're going to look at the key trend lines that are in this market and talk a little bit about our expectations for later in the day. What you can see here, again, is the small gap down and then the hard sell-off. The sell-off almost took us to an eclipse of this breakout pattern on the yesterday's chart where Bernanke finished speaking. Now, Bernanke is actually speaking again today on Capitol Hill, I believe to the Senate today, and he's getting grilled again, but the market has already factored that in yesterday. Obama made his speech last night, 9 p.m. Eastern Time, and the markets generally didn't hear anything new. They had already rallied up. We know they had rallied up beautifully that day yesterday prior to the speech. That could have been on anticipation of the speech. A lot of times it's attributed to Bernanke, obviously, as starting it, but then a little bit of continuation and squeeze into what Obama would say, what President Obama would say in his address last night. That address really didn't unveil anything new, and with that came a little bit of negativity, a little bit of a sell-off today, and that's what you're seeing, folks. You're seeing that today. The market's pulling back, not all the way from the sell-off, from the rally yesterday. The sell-off is definitely not taking anything, the full amount away, which is important, but it is a decent sell-off. I mean, to see the Dow down right now 123 after being up about 230 to 240 yesterday is a decent-sized pullback, and we need to be considerate of that. Now, one thing I'm seeing on this chart, folks, is this trend line. I really want you to be aware of this one. Take the low from yesterday, extend it to the secondary low, and this becomes the key line in this. And let me erase that one. Getting a little taken away here. All right, so again, take the low here and draw your trend line in to the secondary low and look at that trend line. So all of a sudden, you have the base on this market. Now, what's scary about this, and if you extend this, it almost comes into play right here on Monday's open. But the key here is this. If this line breaks, it could get ugly. However, if the market can hold this level, you have to have an upside bias in this market, okay? And all of a sudden, we're seeing the market start to push higher. So keep a close eye on this market, guys. Very, very close eye as this market's starting to push up. Now, you can see this 50 moving average. The white line 50, the 20 moving average is the yellow line, and the 200 moving average is this line. Now, the 200 is where we stopped yesterday. That's a very key player. And what I also want to do, let's draw in our trend lines here, because this could be a very interesting break if we can close above this trend line here. All right, so watch this. But as long as you stay above this trend, look at how accurate this trend line is. This is the big one. This breaks, I expect this market to see this low again, very possibly. As long as this line holds, this market is going back to the 200 ultimately, in my opinion. All right, and at that point, then you have to start talking about a breakout of the 200, which is another thing to discuss. If it happens today, fantastic. It could happen. I'm still relatively neutral to slightly positive on this market until we get through that 200. That break of that 200 after some consolidation, and we could see some more upside, no doubt about it. Okay, but again, the key is right here, guys. Notice how the market has traded down to this level, this trend line, bounced up, really right to the 20 moving average. There's a couple other key trend lines there that you should be aware of. Bounced down to that trend line again and up. Now, what's nice about this is you're seeing higher lows. Here's a low put in. We closed at the low Monday, right, on that ugly, ugly sell-off day. Tuesday, here we got a higher low, higher low, higher low, higher low. Now that's great. I mean, that's good to see as long as we don't break that channel. We break that channel, we're in deep trouble. Now, the other thing you want to keep in mind here, folks, is you have a couple other resistance lines, and I just want to draw them in here. All right? You guys, you know we talk about symmetry, and symmetry is how something equals something, and everything kind of is a geometric shape. This is something very important as well. All of a sudden, you have this upward angled, parallel lined channel, and something very important to watch, because if you do get to this point, and you come into this resistance line that I just drew in, you're going to have a lot of resistance there. This is no doubt as a channel. You broke it at one point here, but you came back in. So it's not a super heavy resistance line there. It depends on if it's meeting with another one, but that would be something to watch. Here's some other lines to watch on the intraday. This double top right up here. You have your gap window is very important right here. Gap fill would be extremely important as well. All right, and these are all things you want to watch. All right, on the downside, should we break this line, this bottom line, which is very important to me, and ultimately I wouldn't be surprised if we saw these lows again if we broke this. What you're going to do is take the low and extend it out, and this is trend line analysis, guys. It's so important. Keep watching our blog, Rant and Rave blog on our website, inthemoneystocks.com. I put a lot of trend line analysis stuff on there that you have to learn. If you're using technical analysis tools like stochastics, RSI, MACD, you're behind the times. Everyone uses that now, and that's why it barely works. You have to use your trendline analysis because it's such a rarity to find traders that know how to use this properly. Okay? So keep that in mind, guys. So here are your key levels. These are all your key levels in the near term. Obviously, if you broke this one down here, you'd be coming down to this level. All right? These are your levels. All right? There's a minor one down here as well on the SPY. And again, we're looking at the SPY intraday. And these are your levels, guys, okay? So keep a close eye on them, and that's what you want to focus on. Now, there's a couple other things you want to watch, obviously. First of all, we are piercing this 50 moving average and this trend line. Again, if we close above that, and we could continue up or consolidate and then break up. If we break below the 50 again, then you have to start watching this lower trend line. And again, I can't stress how important this one is. You can see it on the chart, how perfectly it lines up, how the market's behaving. If that one breaks, you will have minor resistances down, but ultimately, we could be looking at a pretty ugly sell-off here on the day, so be very cautious there. But ultimately, as I said in the beginning of this video, folks, this is the line to watch. As long as you stay above it, and start moving up here, especially above the 50 moving average, ultimately, I would not be shocked to see this 200 moving average come into play today at some point. All right? So enjoy that and see it for what it is. Let's go to the 60-minute in the last little couple minutes remaining, and let me flip over here to the 60-minute. There's the 60-minute. And this is the 60-minute SPY again. And you can see it's actually not a horrible pattern yet. Alright, so you have the big move up yesterday and the pullback. And you're right on the 20 moving average. In my book, on an intraday 60-minute, I need to see this market close above this 20 today. That is really what I want to see. And the market continues to rally here, guys. Very nice little rally going on in this last candle. And so, in my book, this 20 moving average, and you can see, channel all the way down here. This is something I definitely want to see us close above today. If we close above, I continue to have an upside bias all the way to this 50. And at this point, the 50 moving average is at a double top from yesterday. So that's going to be resistance right there, this double top. The 50 will continue to slide lower, so that's going to be a secondary resistance level. But look at this market go, guys. Let me flip back to the 10-minute. We closed above this line, and we're pushing it. And what did I say, guys? As long as this line holds, and you're watching this live as I do this analysis, so I didn't know necessarily this was going to break up when I started here, and you can just see how important these lines are in this chart. All right, as long as it closed above, and now you're starting to inch up, and even if you consolidate sideways or pull back a little, you're still setting the groundwork for a break to the 200 intraday moving average. All right, and again, should it fail at some point, let's say it gets to the 200 and starts to pull back, as long as it holds this lower line, you still have to be bullish. Breaks this lower line, that's when I'd be very worried, okay? So keep that in mind, guys. We'll continue to analyze and focus on this. Again, come join the chat room. We have live video chat now. You're watching my chart, my partner's charts, all the trades we're talking about analyzing live as we go in the chat room. Fantastic learning tool. The chat room is built for educational purposes. We do call out trades, but we're focusing on teaching you to fly. We want to set you free. All right, that's the idea behind it. No other chat rooms do that, so come join. Also join the Research Center where we give out all our nightly videos, educational videos, pro trader watch list, all the key levels in this market. We hope to have you aboard soon. Take care.